I think that's the biggest misconception when it comes to people trying to raise money from family offices is they think it's a numbers game. They try and spray and pray. They'll use the same messages and send it to multiple people, thinking that the person's not gonna know the difference, and really specializing and making sure that it's centered to them and what they're looking for. Like, one of my favorite things to do is if I know a family office's thesis and like what kind of impact they want to have on the world, and I come across an article kind of talking about that, I'll just send it to them on LinkedIn.
Welcome to the latest episode of the Raise&Exit podcast, and today we have another dive into the family office universe. But this time we're not talking to a family office, we're talking to somebody who is deeply getting an understanding of what drives family offices, their motivations. With us today is the founder of Family Office Factory and a whole bunch of other related assets, which I'll let him talk to you about. Colten Ratz, pleasure to have you here. Give us a bit of a background, what you're up to, and why people should be going and clicking sign up at the bottom of this podcast today.
Yeah, definitely. I appreciate the intro, Edgar. And so I'm Colten Ratz, founder of the Family Office Factory, just to kind of give you guys a better understanding of who I am and how I got into this space. So I don't come from a traditional background. I was actually a communications major at Illinois State. I wasn't really sure what I wanted to do and ended up quitting my job in logistics and applying for a event coordinating company. Didn't really know much about it, and they thought I was the perfect fit for the private wealth management summits. So throughout that experience, I built a bunch of really good relationships within the family office space and really got to understand the alternative investment landscape and kind of saw the importance of networking and all the opportunities that were coming from building, relationships in the space and a network. So I decided to start my own company. One of the biggest issues I've noticed in the family office space is it is very hard to navigate. There's so many new family offices. It's such a growing industry. There's not really like a media source where people can go and figure out where they can find different investment opportunities and different gatherings to meet other family offices. So that's kind of why I created the Family Office Factory. And then also I have a part-time job with the Family Office Roundtable where we focus on kind of the soft side of the family office. And then I'm also a venture partner where I do family office relations for Venture Forward Capital, which is a venture capital company in Chicago.
Oh, this is fantastic, Colten. Thank you. And I think it's just such a beautiful transition to one of the, call it the darker side of the questions that is in this domain. For some of our listeners and viewers, family offices have exploded over the past 15 to 20 years. And one of the struggles that is there is that the management or the governance of that money has kind of taken to some darker pathways as well. And maybe we'll start with probably one of the kind of the most difficult questions on here, which sometimes really hooks founders that I've gone and talked to, is the fake family office dynamic. And maybe you can kind of provide a bit of how predominant is it? What are some signals that you should be able to look at that it either sounds too good to be true or you're being led on and you're wasting your valuable time as a founder trying to raise the capital for the business that you're trying to build?
Yeah, that's a very important topic and seems to be, a growing issue in the industry. I think it is so important. That's why it is so important to, network and know the real family offices and kind of interact with them and see who's like mutual connections with them. But I think the main thing with family offices is if you add someone, like I never will like reach out to a family office right away. I'm more strategic about adding people and seeing the long-term value, getting to know them and what kind of investments they're looking for. So I don't ever message a family office right away. That's really a red flag for me. If I add a family office and they message me right away trying to get to know me and I don't have a lot of mutual connections with them right away, that's just a strong red flag. That's not something that family offices do. They're extremely busy and never click on a link. A lot of family offices, like fake family offices, will try and get to know you and try and get your email or your number or send you a link. And it's super important to before you click on anything to make sure you do your research and make sure it's a real family office.
I just love that because what you're also going and addressing is there's a certain etiquette or practice to how family offices generally operate. And And I think maybe just for the benefits of people that are watching this, and some of you may, or listening, some of you may know this well, but I think there's a whole group that don't. So, Colten, maybe you can give just a bit of a sense of how to differentiate a family office from kind of a self-directed VC fund or an angel or something like that. Because I think being able to distinguish what a family office truly is and who the money behind the family office is, which I think sometimes people conflate the money and the office as being one. I think that would be helpful for people that are watching and listening today.
Definitely. So I've gotten very good with LinkedIn Sales Navigator. That's one tool that I use to find family offices, and a great way you could kind of use the filters, and a great way to find if it is a family office or not. Especially single family offices are a lot easier to find than multifamily offices, because a lot of RIAs kind of consider themselves a multifamily office. That's more of a gray area. So with Sales Navigator, you can really do the filters, so you can narrow it down. Like usually family offices, if it's a single family office, they're not going to have more than 10 employees, at least on LinkedIn. Like, so that's a great thing to look for. Also, privately held companies, that's something that not everyone's looking for. That's a filter that I always use. That's because family offices are always extremely private, and they're all privately held, so they're a lot harder to find. So if you're on Sales Navigator and you use that filter and then use keywords like family office, alternative investments, stuff like that, then the space, it makes it a lot easier to find family offices.
That's very helpful. And let us kind of build into more of the etiquette aspect of it. Like, look, there's different kind of professional guidelines that is there. There's the whole stories in the venture capital, like look, just show up in San Francisco, walk around, and you'll stumble into 15 VCs ready to throw money at you, which is very different from the private equity domain, which is, depending on if it's, small, mid, or large scale, do you know the chief of staff? Do you know the executive assistant? Can you even be let into the building, right? But
Yeah.
family offices are very rarely very blatant or out there, usually because of the fact that there is a layer between the money and the office. So can you kind of articulate that and the role of, and call it family offices that govern money on behalf of the actual investor, right? That's more of a stewardship role
Yep.
versus the self-directed one. So maybe just dive into that. You talked a little bit about the fact that it looks suspicious if they're all excited and wanting to go and get you to sign up with links and stuff like that. But what's another thing to kind of consider here? And why is it worth it? Like, why is it worth for you to actually follow the etiquette of family office engagement? What's there on the other side for a founder that they can get from a family office that they wouldn't get from other sources of capital?
So when it comes to family offices, it's all about building long-term relationships, trying to get the deal. So I think really understanding the family office is so important. I don't think enough people, go, especially people going to networking events. Like, you can get a list of the investors that are going to be there, go through their portfolios and see. I think that's the main issue when people pitch to family offices, is they don't do their research. They don't, before they pitch a family office, they don't know if that's something that they've invested in the past, if that aligns with their values, what they're trying to do. Every family office is different. They all have different values and want to make impact in different areas. So really understanding the full thesis of the family office is the best strategy to go at anything. And maybe it isn't a good fit for you, but still building that relationship and getting to know them, and somewhere down the line maybe could be very beneficial for you, and or maybe you could introduce them to someone. I think that's another thing that I think not enough people do, is just kind of offer value to family offices without looking for something in return. That's very, very valuable, and it tends to come back around to you.
Oh, that's really helpful. So let me kind of build on this because look, there's a lot of misconceptions that is there around raising capital, and then you kind of go in here, oh man, I wish I'd known this, right? Welcome to the purpose of Raise and Exit podcast, which is you should have known this now so that you don't suffer through the same error months or years from now. Give me a sense a bit further on that due diligence criteria, right? Because venture angels, I would say there's a bias, not universal, but definitely a noticeable one of just try and get in front of as many people as possible. But if I'm hearing you right, Colten, what you're actually saying is Don't go to family offices and say, I've gone to 500 of your colleagues trying to go and raise money from you. What do you think? It's more like go and figure out the five, understand them really, really well, learn from those, and you might not even need to go to the sixth one. Is that a more responsible assessment of the dynamic that you're trying to allude to?
100%. Yeah, I think that's the biggest misconception when it comes to people trying to raise money from family offices is they think it's a numbers game. They try and spray and pray. They'll use the same messages and send it to multiple people thinking that the person's not going to know the difference,
Mm-hmm.
and really specializing and making sure that it's centered to them and what they're looking for. Like, one of my favorite things to do is I'll send if I know a family office's thesis and like what kind of impact they want to have on the world, and I come across an article kind of talking about that, I'll just send it to them on LinkedIn. I won't even say anything. Just say like, "Hey, thought this lined up with your thesis. Thought it might be worth a read." Like, and I think just stuff like that goes a long way. People tend to see you as like a friend, not someone who's trying to get something from you.
Yeah, that's very helpful to go and do that. So let's build on that a little bit. In that dynamic, right? Don't expect for spray and pray. Don't go for like immediate response, right? Some of the signals or warnings. Can you then go into a bit of what I would say are the myths or misconceptions of how family offices actually operate, right? And again, let's stick away from like the self-directed ones. But if you have a full-fledged family office, what are they doing? Like who are they actually serving?
Yeah, it's a good question. I think it's kind of different for every family office, but I would say like they're serving, kind of trying to make sure that everyone within the family, or if it's a multifamily, is all on the same page.
Mm-hmm.
And I think a very common misconception that I've seen in the family office space is, people think that they move slow with their investments, and that's something that I just haven't seen. I think that's they have the ability to move slow because they have patient capital, and they don't need to make an investment. They don't have strict deadlines or anything where if it doesn't align with what they're looking for, and they don't think it's a great fit, they don't have to make the investment, which is, a lot of companies have like set margins and they want to make a specific amount of investments by the end of the year. So they have the ability to move slow, but what I've noticed is they can also move faster than anyone else. When they do see it's a great fit, and you align with what they're looking for. They believe in the person, the GP. They're able to move fast with it, and things are able to get done quick. So I think that's a big misconception within the space.
Well, that's helpful. So on that whole point of patience versus being able to be quick, can you give me a sense of the whole dynamic that is there between kind of multiple sources of capital in a raise at the same time, right? There's some family offices, they participate as LPs in a venture capital fund or a private equity fund, etc. But the family offices that are going and cutting checks directly, how do you set yourself up for success in family offices that do want to have the direct investment? What type of biases are there for they want to be the sole investor in a round, or do they want to lead versus follow? How have you noticed that due diligence is different from a family office versus a venture capital firm, an angel, or private equity firm?
Yeah, I think that's a great question. It's a tough one to answer because, everyone kind of has a different process, but it does seem they're able to move quicker through that and make sure, I think due diligence is something that it's preset. So they kind of
Mm-hmm.
know beforehand, at least with most of their investments. They might make exceptions or something if they really like someone or believe in an idea. But for the most part, they're pretty set and they know everyone's on the same page, or should be beforehand going into the investment. So it makes it kind of easy doing the due diligence, because they can make like a checklist, like, all right, well, here's what we believe in. This is our thesis. Do they check these boxes? So I think it makes it a lot easier for them in that sense.
Yeah, I want to dig into what you went and said about the fact that there's this patient capital advantage that is there for FOs, right? Like they don't necessarily want to invest and get out in 2 years because of a big Series B or something, or they're starting to sell you within a year. Conceptually, if that might be certain types of private equity, dig into a little bit on that patient aspect of it. Like, what's that trade-off between, maybe call it more founder-friendly terms, and what would you say from your perspective are some of those founder-friendly terms? And then what are you paying for in exchange for patience? Is it governance? Is it reporting? Is it that fit on thesis? Like, what's that advantage and trade-off that is there between patient capital and founder friendliness?
Yeah, I think the biggest advantage is a fit. They have the ability to every family wants to have a different impact. Every family goes through different struggles, and they all value different things. Like maybe someone in the family died of a tumor or
Mm-hmm.
something, and they want to help raise money for that. That's something that's very valuable, or really like hits them home. So
Yeah.
uh,
That goes back to
yeah,
your homework question, right? Like, do your homework on who are
exactly.
they? Who are they as people that are behind this, right? Not just
100%.
the, hey, I want $1 million, right? Keep going, keep going. This is great.
Yeah, exactly. And just kind of doing your due diligence. And I think another thing, kind of just going back to something that I've noticed that people kind of mess up on is, they focus too much on the pitch deck. One of my favorite things at Marcus Evans, my old job, when I was in charge of sourcing all the investors, I would go up to the investors after the one-on-one meetings, like the people that I brought to the event, and I would ask them, how the meetings went, and if there's anyone they really enjoyed. And one thing that I really noticed is way too many people focus on the pitch deck. They're in the numbers, they're all kind of, that's like the main focus. They're all trying to sell the idea, and I don't think enough people sell themselves. That's something that I think, just being yourself and showing up and trying to be a very personal person goes a very long way. I've heard pitches of people pitching people for 30 minutes and not bringing up one thing about themselves, or asking, the investor about themselves. So I think that's something you definitely want to avoid, and just being authentic and personable goes a very long way.
Oh, this is so good. Because, again, I hate doing like broad strokes usage, but in the interest of brevity, if you typically look, right, private equity acquisitions or investments are really from, call it, a risk mitigation point of view, right? Like they don't
Yep.
like buying companies that are bleeding money unless they have a real plan on being able to turn it into a profitable venture relatively quickly. Venture capital has a lot of that stereotype of like they're hunting those 100 to 1000 to 10,000x on initial capital, right? Like that kind of is that big piece of that. But what I'm hearing from what you're talking about here, Colten, is that's not necessarily the motivation. And there isn't that broad strokes motivation. There may be a certain operational practice to a family office, but I'm really hearing one motivation at a time in terms of why they are here in that meeting with you. What's your take on what I just said? Am I kind of in the right track, or am I kind of turning family offices into a broad stroke myself with you right now?
Yeah, I mean, I think that I just kind of been myself.
Yeah.
But yeah, I don't really know what else to say, I guess, about on terms of that.
Well,
But
it sounds like you really got to go and treat each family office as their own investment thesis versus
oh yeah,
going and somebody who goes and puts VC on their LinkedIn or X account,
100%.
right? Like
Yeah,
I think what you're telling me is that you actually cannot typecast. I think there's certain processes that are there that you follow, but I think the typecasting is probably one of the biggest errors that you can make in going and saying
100%.
I'm looking for family office money. Is that accurate?
Yep.
Okay.
Yeah,
So on
I
that
think.
note then, because of the fact that you have different kind of motivations, different theses, how how do you kind of account for pooled money? Could be from a multifamily office point of view, or how do you go and raise the question of, hey, do you know anybody else who might want to participate with you in this deal in the family office arena? How much does that happen? How do you handle those dynamics? What are some suggestions or tips you'd have?
Yeah, I think that's a great question. And I think that's just kind of the importance of networking and getting your name out there and building those relationships. Because, like I said, not every family office is going to be a great fit for you. But there is, all these family offices, what I found is they talk and they know each other. They all attend the same events. So, just because it's not a good fit for that family office doesn't mean, maybe you had a good conversation with them and they liked you and they know another family office who is looking for investment opportunities in that area, and they might introduce you to them or bring it up to that person and they might reach out to you. So I think just kind of getting your name into the space
Mm-hmm.
and letting people know what you're doing, and just kind of with as many people as you can, because it is hard to find. You can't just go in and find the perfect fit right away. So a lot of times you have to warm outreach. So going through, talking to people and figuring out who they know who might be a good fit is probably the best approach. So I think just start with building relationships in the
Yep.
space and letting people know what you're working on, and I think you'll just start to kind of see traction come little by little.
I've been reading your newsletter now for some time, and one of the things that I've been kind of noticing is I kind of have the feeling that family offices are asking different types of questions of themselves, sometimes the person looking for capital. What's something you've picked up as you've been building out the office factory and you're having your discrete conversations in the market? What has been kind of they look at this differently than a VC or an angel or private equity? What are some things that have stood out for you without naming names?
The co-investing right now is massive in family offices. I think it kind of goes off the whole networking in the space, like kind of what I was saying. Like a lot of them know each other and
Mm-hmm.
they talk to each other about deals. So, the co-investing, especially in the United States, is became huge. And I would say just another big thing that kind of sets them apart is, I was gonna say kind of like their communication.
Mm-hmm.
So I think when it comes to a family office, they're trying to make sure that everyone is very included. It seems like now more than ever with the great wealth transfer coming.
Yeah.
I think there's supposed to be like a couple. I don't know the, the exact amount, but it's crazy. A trillion, 5 trillion maybe transferred in the next like 10 years. So, the communication through the whole family and making sure that everyone's on the same page and knows what's going on. I actually talked to a family governance expert a couple weeks ago, and I asked him, at what age do you think they should start bringing in the next gen on some of these conversations and make sure they know kind of what's going on. And I was blown away at the answer. He said 6 years old. He said at six
Wow.
years old, family should start, introducing them to what they're doing and what they're working on, what kind of impact they're trying to have on the world. So that was very eye opening to me. I didn't think that was what he was going to say when I asked the question. But yeah, that's just kind of, I guess, one thing that separates them. They're working because it's generational money. They're
Yeah.
not investing for the next 10 years. They're investing for the next decade.
I think that part is such a good point that you're making, right? It kind of goes back to time frames, right? Private equity funds, they have a limit to them, even if they're growth equity, that might be a couple of years longer. Venture capital, same thing, right? But I
Yep.
think this is, and I'd say that to me is probably the thing that I don't think people understand and appreciate of what that means by patient money. Like patient money is they might be with you for 25 years if that's what
Yep.
makes sense. And I think sometimes in the kind of call it the, and I don't want to belittle it, but call it the game of raising capital. I think there's so much short termism that is out there in the public noise. And I think you almost have to have like a state change in how you approach. Like you said, the deck doesn't matter. Being able to understand the motivations matters, right? Have that foundational relationship, because if that foundational relationship is there, they'll go and make a decision maybe quicker or with a different form of due diligence than other institutionals or VCs would. So on that note, I kind of want to bring it to the last question that I have to wrap this up for us today, Colten, is given what we've learned in this current 30 minutes, what is something that you'd really encourage a listener of Raise and Exit to just like enshrine in themselves in approaching a family office? Like, what's the one thing you want them to say, like, don't ever do this again or do this forever?
I would say don't ever, message a family office a pitch deck with your first message. That would be, or even like bring up your raising capital. It's something that I feel like everyone's done, even I've done it. It's not, that's probably the biggest mistake you can make. You want to come in relationship driven. Also, just messaging someone right away. Like what I've noticed is I get way better response rates if I'm connected with someone for like 3 months before messaging them. If someone connects with me and I message them right away, like my response rate is way worse. So I think letting it kind of marinate and your connections, build now. I would say go start connecting with as many as you can, and let them become familiar with who you are, your content, like their stuff, maybe even comment on something. I think that's like the most underrated form of getting attention from a family office is like commenting on their stuff. They post all the time. Like family offices are pretty active on LinkedIn. So just liking their stuff, commenting on it, and, shooting them a message, even if it's something like, hey, really enjoyed your last post, would love to, maybe find a time and to talk or something like that. You don't want to be pushy, very, very genuine and open. And yeah, I think that is a great way to start, and then kind of just continue to build. It comes a lot quicker because, I started LinkedIn at the start of 2024, and I had like 200 LinkedIn connections, and I'm at like 10.5 thousand now, or so. It's, if you stay consistent and dedicated, you can grow pretty fast, and you want to just kind of make sure that you are on top of it, and stay in the vision of the family offices. LinkedIn's perfect because you could grow vertically. It's the only social media platform where you can really control who your connections are. Anyone could follow you and look at your stuff, but you control who you're connected with. So you can really build vertically. So whoever you're trying to connect with, send connection requests to that area, and you'll be able to, if you're in the venture capital private equity space, you start connecting with a bunch of like CEOs in that space, then all of a sudden you'll be showing up on their like recommends page.
Yeah.
So yeah, I think just staying consistent and staying at it, and I don't think people see the value that it brings, and it comes pretty fast. So I would give it a try.
Colten, I love that. I've spoken to a lot of VCs and founders who've raised through VCs, and the deal started in DMs on Twitter typically, or X. But I think what you're alluding to is that with family offices, the deal starts with that human to human connection.
Yep.
Thank you for having us on here. Really, for all the listeners, please go sign up for Colten's newsletter if you want to go and foster and understand family office relationships. Pleasure having you on the show with us today, Colten.
Thanks so much for having me. It was great.